All right, good morning, everyone. Let's get going here. Okay, it's been a wild ride this morning since markets closed in the states last night. Obviously, we traded solidly in the states, pushing up nicely throughout the day. We did start to correct. The Nasdaq actually came down right to test flatline, right at flatline, tested there, and bounced up into the close. All the markets bounced up a little bit into the close. We had quite a bit of data out yesterday. We had GDP numbers out in the states, which came out significantly better than expectations, 3.5% versus the expectation of 3%. We had jobless claims as well, which were more or less right in line. The lowest. It's the lowest moving average we've had in a long time. We also had a lot of earnings that continue to come out. Visa, MasterCard, among others. And, so obviously the market continues to gain strength and continues to return to normality. We talked about yesterday the sort of bond yields and currencies and all those kind of things returning to normality, really taking us into new highs or back toward the recent highs. What the real excitement was obviously overnight. We had Japan, which announced a surprise stimulus, 8 trillion or whatever it was, yen or something along those lines. Really caught the markets wrong-footed. You saw the Japanese yen absolutely tanking on the back of that to new lows, and really got markets, pushing just drastically higher. We had a huge reversal in pretty much everything. S&P obviously was trading more or less around. I think we're up 2.5 or 3 points on the S&P future. A few minutes ago, we were up as much as 25 points in the S&P future. I mean, just an enormous move there. We had every market across the board, obviously. You can see here, I mean, the size of the Nikkei being up 5% kind of dwarfs what these other markets are doing, kind of up around 1% on the Australian market, up a little bit north of 1% on the Hang Seng, and the others also trading solidly. So a lot of things making some big moves on the back of that. One thing that was kind of a surprising move, I think, was the commodities actually have traded down a little bit on that number. Oil actually moving down, gold moving down a little bit, which is kind of surprising to me. I would have thought, if anything, they would have spiked on the back of that, but they did come down nonetheless. It's going to be a hell of an interesting day today. There's going to be obviously some big opening prices right now, with futures trading up 1.5% before the market opens. So just keep your wits about you. They could bring some gamma back in the market, kind of tripping guys out, and bring some gamma buying into the market. Could be interesting today. All right, in terms of corporate action, we had RDF that's out to open with full year 2014 numbers, and we've got Chevron before the market in the States, as well as Exxon and Berkshire Hathaway. In terms of market data, we've got the Japanese jobless rate we had this morning, the CPI numbers, which came in a little bit soft, probably obviously one of the reasons why they're coming and doing more stimulus. We've got consumer confidence out of the UK. We've got retail sales out of Germany, unemployment rate out of the Eurozone, CPI out of the Eurozone. Then we've got our trade balance here locally at 2, followed by personal spending, Chicago Purchasing Manager, and Michigan confidence numbers out of the States. All right, let's get into the maps. I'll look at a couple of things in the big picture. To start out with, one of the things that we're looking at is the S&P 500, which was already dangling just north of the 2,000 level. Where futures are trading at the moment would actually take us to new highs on the S&P if you price that future in. So I think that's something quite spectacular. We're at about 18 and a quarter on the index, and we're looking to open at about 2015 today. It's absolutely out of this world, that the rally and the spike that we've had off of the lows. I'm kind of looking at this a little bit different than some of the other guys are. I think with what's going on this morning, this to me seems like it could kind of be a capitulation at the end of this rally off of the lows. Just, obviously squeezing the last shorts out, the last guys that have been fading this run. And that's kind of my opinion on the whole thing that's happening today, but we got to wait and see how that plays out. I could be totally wrong. Next thing we'll look at here is going to be the oil price here. This is light sweet crude, West Texas Intermediate, and we're really kind of making a little descending triangle kind of down into this 80 level. The bounces keep getting smaller and smaller off the 80, and things like the stimulus program, these kind of things should, if anything, should get commodities going, and it can't go. So the fact that we're not getting any significant bounces off of 80 makes me really think that there's a possibility that 80 drops here, and 80 drops, I think we're going to have a quick move down at least $3 or $4. I wouldn't be surprised to see us move, spike down even harder. I think the market's caught on the wrong side of this trade still. All right, the next one we'll look at is spot gold. I'm going to look at this on a 2-year, I'll take that back. I'm going to look at it on a 5-year daily, and I'm going to shorten it up here just a little bit so we can we can see it more closely. So there's two sort of levels here to look at. There's one is right at 1200, and then there's kind of the wicks. So if we zoom it even further forward, so you can see here how the major level's really at 1200, and then we've wicked down to around 1180 a couple times. So, the way the gold shares are trading at the moment, and usually the gold shares are leading, you can see that obviously, I'll show the gold shares in just a second, that it's telling you that the gold price is going to come lower. I actually think this 1180 level is eventually going to drop over the next few sessions, and I think it's going to get messy for the gold price. The bounces you can see here have just gotten smaller and smaller and smaller off of the 1200 level. And for me, this last little hump here kind of looks like that was a little pathetic attempt at a bounce, and we're ready to give it up. So if we drop this level here, I think the gold price can get absolutely decimated. I think most of the shares have priced it in, but obviously it's probably not going to help any of the shares. We'll have a look at a couple of those, or one of these real quick. One's AngloGold, which we talked about. It dropped this level here at about 118, just south of 120. Call it 116. And when we dropped that, that was really kind of the telling point. We traded down to 92 equivalent last night in the States. It just looks ugly, really, really ugly for these shares. If we look at the other shares that have continued to be weak and really continue to sell off hard are the mining stocks. They should get some sort of a boost this morning. Let me just go into 1 year. This is ARI here. The rest of the sector really failing and taking out new lows for the most part. We just had ARI just poke its head below 136 on a closing basis yesterday. You want to be looking for probably the height of this channel, which is about 12 Rand move, take us down to about 124 if it wasn't for this huge spike that we're expecting this morning. But if we get back below 136 at some point in the next couple of days, it could take us down quickly to 124. And then the last one we're going to look at this morning is Omnia, which has also dropped quite a major level here at about, call it 222, 223, somewhere in there. You can see there's major support, or there was major support, which has been dropped. It also was right at the 200-day moving average. So everything really lining up here. I think we can see a quick 20 Rand move down on the breakdown there. And that's it for today, guys. Good luck out there. It's going to be a wild one today.